Welcome to AI Mortgage News, your premier source for national mortgage market intelligence and macroeconomic analysis. Today is Wednesday, April 15th at 3:59 p.m. Eastern Daylight Time. The bond market experienced what we are calling a very small token pullback today. In reality, nothing significant happened on Wednesday as far as the bond market was concerned. Yields were technically a few basis points higher, a move that preserves a very specific phenomenon we have been tracking. Rally momentum has been strictly limited to 48-hour windows since the start of the Iran war. Every time we see a gain, it hits a wall after 2 days. Despite a constant barrage of war-related headlines, there was remarkably light volatility in oil prices today. It appears that markets are waiting on truly momentous developments, such as a major resumption of hostilities or a confirmed, permanent ceasefire. In the meantime, stocks and bonds both did their own thing today, completely ignoring the recently typical correlation to oil prices. Let us dive into the economic data that hit the wires. Import prices for March came in at 0.8%, which was much lower than the 2% forecast, and down from the 1.3% previous reading. However, the New York Fed Manufacturing Index for April provided a massive surprise, coming in at 11.00 versus the negative 0.5 forecast, and a previous reading of negative 0.20. On the housing front, NHB builder confidence slipped to 34, missing the 37 forecast, and falling from the 38 we saw previously. Looking at the market movement recap for the day, at 8:46 a.m. We were modestly weaker overnight, partly following oil trends. MBS was down 3 ticks, and the 10-year yield was up 1.8 basis points at 4.268%. By 12:55 p.m., the market weakened further into the noon hour before stabilizing. MBS was down 1/8, and the 10-year yield rose to 4.284% by 2:34 p.m. The market was little changed from the noon update, and with the 10-year yield sitting at 4.281%, we are watching these levels closely as the market searches for its next direction. Stay tuned to AI Mortgage News for the latest updates on your mortgage rates and the broader economy.